Hey everyone, welcome to 6th episode of this next Multibagger series. Since the market was on consistent decline mode, I paused the series on the next Multibagger stock. However, in this video, I want to discuss the fundamentals of a mid-cap private bank that is showing tremendous potential for growth and checking all parameters for a multi-bagger growth potential. Well, no marks for guessing, it's IDFC First Bank. If you have been following my channel, you would know that I have discussed IDFC First multiple times in my videos. The first time I covered IDFC First was in April 21. That's 2 years ago. At that time, IDFC First was at levels of around 55. But bank share kept on falling more than 50% to levels of rupees 30. Then I did one more video last year in August 22 when it was at levels of 43. And I mentioned this bank in multiple videos in past. In fact, I also discussed my top 10 stocks holding in portfolio during September 21 and this bank was part of my portfolio. Now on Saturday, IDFC First has declared its Q4 results and the results are exceptional. Bank's Q4 profits are up 134% year on year and overall bank's FY23 profit stood at 2,437 crore against FY22 net profit of 145 crore. Now I have added this stock in my list of next multi-bagger series and today I want to discuss the fundamentals of IDFC First, including its business along with future prospect, leadership, financials, key strengths, risk, and finally the valuation. The most important takeaway from this video would be to understand how did IDFC First overcome its legacy problem of infrastructure loans and transform itself into a retail-focused banking company. In case you have missed the last 5 videos of the series, I would recommend watching it. Just one clarification. This video is only for educational purpose where my goal is to identify fundamentally strong companies and discuss their business. Ultimately, you need to research and decide where to invest. By the way, the stocks I covered in this series are SIP grade stock. It means you can consider adding them systematically. And if there is any fall in these stocks, then it is worth accumulating them rather than panic selling. Alright, let's get started. The journey of IDFC First started in December 2018. So it's been just 4.5 years. Basically, IDFC First was formed as a result of merger between IDFC Bank and Capital First. IDFC Bank was basically established in 2015 after the demerger from IDFC Limited that was established in 1997. And Capital First was one of the fastest growing NBFC established in 2012. However, the journey of IDFC First was very bumpy. It got listed on BSE and NSE in January 2019 at around 48 rupee. However, over the next 1 year, the share price tanked more than 50% to levels of 18, mainly because of COVID and high NPA. Although the share did recover to levels of 66, but it again tanked more than 50% to levels of 30. However, the stock has sharply recovered more than 100% since June 22 lows to current levels of 62 rupee. Now it is very important to understand what went wrong with IDFC First in the past and why the share price has jumped more than 100% in last 1 year. And most important question, can IDFC First continue to deliver great returns from current levels? So basically after the merger of IDFC Bank with Capital First, the assets and liabilities of IDFC Bank got transferred to IDFC First. But there were many legacy issues. IDFC Bank had major deposits and loan from wholesale vertical, including various infrastructure companies. As a result, IDFC First struggled with high NPA and high provisions for next few years, including losses from Reliance Capital, Diwan Housing Finance Limited, Vodafone Idea, etc. Another issue was high cost of capital. Due to high provision, bank reported high losses of 1,908 crore in FY19 and 2,843 crore in FY20. However, IDFC First focus was to become a retail-centric bank and it kept on building its fundamental blocks. Fast forward today, IDFC First that had a customer deposit of 38,455 crore in December 18 with 73% wholesale deposit and just 27% retail deposit has now transformed to a total customer deposit of 1.36 lakh crore with 76% retail deposit and only 24% wholesale deposit. In other words, retail deposit that were just 10,382 crore in December 18 has now swelled to 1.03 lakh crore in March 23, signifying 10 times growth. Likewise, if you look at the loans and advances, in March 18, IDFC First had 36.7% financing from infrastructure sector that has now reduced to 2.9% in March 23. and its corporate book exposure excluding infrastructure loan has reduced from 29% in March 19 to 16% in March 23. So on one side, while its wholesale deposit and advances were slowing down, its retail businesses were growing exponentially. For instance, its customer deposit grew at 4-year CAGR of 36%. Its CASA deposit grew at CAGR of 74% in last 4 years. And CASA ratio jumped from 8.7% at time of merger to 51.7% in March 21, which is maintained at 49.8% in FY23. Its net interest income jumped from 4,845 crore in FY19 to 12,635 crore in FY23, signifying 27% CAGR growth. Its fee and other income has grown from 1,167 crore in FY19 to 4,142 crore in FY23, signifying 37% growth. Please note that 91% of fee and other income is from retail banking that include loan origination fee, credit card and toll, trade and client forex, general banking fee, etc. Due to all these positive development, bank's core operating profit has grown from 1,105 crore in H2 of FY19, that is post-merger, to 4,607 crore in FY23, signifying 43% CAGR rate. Bank's two key parameters, return on equity and return on asset, have also shown significant improvement, where ROE has grown from 5.44% in Q3 of FY22 to 13.45% in Q4 of FY23. And its ROA has grown from 0.64% in Q3 of FY22 to 1.41% in Q4 of FY23. Bank's asset quality has also improved a lot. For instance, in March 19, bank's gross NPA was 2.18% and net NPA was 1.24%, that increased to 4.01% gross and 1.9% net due to COVID. But look at the sharp fall in NPA that currently stood at gross of 1.65 and net of 0.55%. Bank's provisions have also fallen from 3,109 crore in FY22 to 1,665 crore in FY23, signifying 46% fall. So due to sharp improvement in operating profit and asset quality, bank's net profit zoomed from loss of 2,843 crore to profit of 2,485 crore. If you look at quarter-on-quarter level, during FY19 it was on loss, mainly due to high provisioning on Reliance Capital, Diwan Housing Finance and other infra accounts, then provisions on telecom account. It did turn profitable in FY21 but was badly hit due to COVID. However, since last 7 quarters, bank has posted sharp and consistent growth in net profits that stood at 803 crore in latest Q4 of FY23 quarter. And the most important point is that from now onwards, there is no looking back. The fundamental building block that were placed during these 4 years has placed IDFC First on profitable trajectory, and net profits would continue to improve. As far as future growth prospects are concerned, Indian economy is bound to grow. We are the fastest growing economy in the world with a total population of 140 crore plus, out of which 50% population is below the age of 35. As more and more people join the workforce, they would contribute in country's growth. And banking sector is the backbone of the economy. If India is bound to grow, it can't grow without banking system. Because people need loan to buy house, car, education, start a business, etc. Then you have multiple sources of revenue in terms of credit card fee. Then even digital ecosystem is building up, including your FASTag, UPI payment, online bill payment, etc. Then bank is building a strong wealth management business. So the possibilities are immense. In one of the interview last year in October 22, bank's MD Mr. V. Vaidyanathan mentioned that IDFC First will grow at 25% CAGR rate for a long time. At the time of merger in 2018, bank has given guidance for FY25, and as of March 23, bank is on either track or has already achieved its guidance across capital, liability, asset quality and profitability. For example, if you look at bank branches in December 18, it had 206 branches, and bank guidance for FY24-25 was 800 to 900 branches, and in FY23 itself it has got 809 branch. Likewise, if you look at the advances, its retail and commercial finance in December 18 was 36,297 crore, and its guidance for FY24-25 was 1 lakh crore. And in March 23 itself, its retail and commercial finance stood at 1.26 lakh crore. As far as key strength is concerned, bank's biggest strength is its strong leadership of Mr. V. Vaidyanathan. He has 30 years of experience in financial sector. He started his journey with Citibank during 90s. Then he set up ICICI Group Retail Banking between 2000 to 2009 and was the MD and CEO of ICICI Prudential during 2009 to 10. Then he successfully ran Capital First business that witnessed extraordinary growth before the merger with IDFC Bank. So he has a rich experience in banking industry with an exceptional track record. The vision and values he has instilled in IDFC First with focus on retail banking has set up the solid foundation for the bank. And now that IDFC First has become a retail-focused bank, it has resulted in sharp profitability with improvement in asset quality. This retail-centric approach will be the key growth driver for the bank in years to come. Although the major risk going forward would be the rise in NPA if bank is not able to disburse the loans wisely. And of course, competition risk will always exist. There are already many banking players in the market, and this banking and financial sector is facing strong competition from new age fintech companies. Finally, as far as valuation is concerned, at current levels of 62 rupee, IDFC First commands a PE ratio of 16.4 and price to book of 1.8. Just for comparison, top tier banks like ICICI has a price to book of 3.5, HDFC Bank has a price to book of 3.78. So compared to that, IDFC First has a very attractive valuation. And IDFC First has a market cap of around 40,000 crore. So it's a mid-cap banking company with a lot of room for growth in the years to come. And hence, I expect IDFC First to finally cross the levels of rupees 70 in the near term. And in the long term, only sky's the limit. Personally, I don't like to give specific targets, but all I know is the business of IDFC First is very solid and would grow at a very good rate in the future, which will eventually drive its share price. So in this video, we discussed the business of IDFC First Bank along with its transformation over the last 4 years. I hope you'll find this video useful. Now tell me in the comments, do you hold IDFC First in your portfolio? I'll see you next video. Till then, take care.